Okay, so lots to track, but let's kick it off with global cues. We have Mark Matthews of Bank Julius, Baer and Co. joining in. Mark, good morning and happy Friday to you. First things first, looking at the overnight action on Wall Street, whether it's equities or bonds, it seems like the market has digested this hawkish pause, and it seems like markets want to basically move higher. Is that how you read it? And what is your immediate outlook on the global setup to begin with?
They are reading it that way because I think the markets don't view this as a hawkish pause. I think they feel the Fed has done raising rates, and probably by the time we get to the July meeting, there'll be ample evidence to suggest that the inflation target can be reached without more rate hikes. And when you think about it, there's three components to the FOMC day: the decision itself, the statement that follows, and then since Ben Bernanke, they've been doing a question and answer session. And I think it's just human nature that we tend to remember the last thing that somebody told us, which is, in this case, the Q&A session. And the read of the market, and I think correctly so, was a dovish read of the Q&A. Particularly, Mr. Powell referred to disinflation in the housing services segment, which is the largest part of the inflation baskets. And if that's the case, I don't really see what is going to keep inflation very high. In fact, the Cleveland Federal Reserve is targeting, with their inflation nowcast, which aggregates high-frequency data, 3.2% for the June inflation reading. So that's what I think about the Fed meeting. And then you mentioned the setup for the markets. I'll just say that we have the FANG stocks just 2% below, taking out a new high. Of course, Apple and NVIDIA already have, but the NYSE FANG index is about to break to a new high, and the dollar's rolling over. I can't think of a better setup.
Hi, Mark. Good morning. Mark, how do you approach the Indian markets? We have had our share here in the last 2.5 months or so. We have done pretty well from those lows. What's your view right now? You have been quite optimistic on the Indian markets. I think the last time you mentioned as well, the street is expecting earnings cuts, which may not come about, which is not such a bad thing. What's your view? How do you approach the Indian markets?
Nothing has changed in my own view. The only news I can see is politics, which I don't think is particularly relevant for the market. And the fact the RBI is probably done hiking, which of course is a good thing. And the rupee's stable. And I mentioned earlier that the dollar looks like it's rolling over, which is always a benefit for emerging markets. And the icing on the cake is that it's very obvious foreigners aren't going to go back to China for a long time to come. And the second largest market in Asia is Japan. That's the one they spend most of their time looking at. But the third biggest is India. It's a big market by any definition. As I'm sure you're aware, it's larger than the UK market now.
Yes.
And it's only going to get bigger. And so I think foreigners are becoming interested in it because they want to allocate outside of the United States. They don't want to have all their eggs in one basket. And in Asia, for the last 15 years, they only looked at China. Now they're looking at others, and I don't quite know why it's taken them so long to come and look at India, but it's clear they are, and so I think they'll be a positive force as well.
Well, if it's taken them long to come to India, they'll be paying a higher price as well, because the Indian index is the only one which is closest to its record high in among the emerging packs. So if a lot more money has to come to India, at some point valuations will start, becoming a bit of a speed breaker, right?
Yeah, at some point, but I don't think they're very stretched right now because we have had 18 months to digest the big move from before. And so last time I looked, and correct me if I'm wrong, Nifty's on around 17 times. I don't think that's expensive when you've got double-digit earnings growth.
So, Mark, coming back to the question, since you are very optimistic on India, you're expecting more foreign money to come to this market as well. Which pockets would you prefer? What would you look at playing? Would you be a contrarian and, let's say, buy IT because that's where concerns are right now, or would you stick to more of the investment-oriented themes?
I'm a little lazy, or maybe just stupid, that I don't like taking big sector bets or even company-specific bets. take a view that I think that India is going to do well, the economy is going to do well, and therefore the market should do well. And I just like the whole market. But if you really ask me to choose just one sector, I'd just come back to the banks, because they are the heart of the economy, and we're entering into a capex cycle now with capacity utilization kind of breaching about the 70% level, and the banks have the money to lend. To me, the banks are fine, and I know that story's been parroted a million times over the last couple of years, but it hasn't changed.
Sure. Mark, just a final question to the point that you made about money looking for options beyond China. One option is Japan. We're seeing what happened to that market. Now, here, that gush of liquidity so far hasn't flown in. I mean, we saw some of that in May. June's been a little more tepid. So do you see this coming in via the passive route, or do you see a lot of actively managed foreign money coming in? And if yes, by when? What's your best guess?
Yeah, I think that probably in the summer, people are going to start looking at India more closely, because the S&P has done so very well, and of course the Nasdaq even better. But they don't want to go buy Nvidia at the peak. Maybe some people will, but they're looking to diversify, and they're probably looking for things that have lagged a little bit. And India has, when you compare it to the U.S. or Japan or Europe. And so I think the actively managed funds will be looking at India starting this summer into the fall. And if the dollar is really going to go down, then that's another thing that'll make them interested, because the one thing that's kept people back from India is the risk of the rupee. But that actually seems to be one of the more stable currencies in the world right now.
True that. In fact, as we speak, the Bank of Japan data is out as well. They've maintained their policy rate at minus 0.01%. So no problem here. 0.1% rather, minus 0.1%. That was expected, and that's what has been given. Mark, finally, before we let you go, at what point does the India-China equation become unfavorable for India?
I can't see that happening. It's going to require change in government, and I don't see that happening.
All right, take that point. Thank you so much for joining in. Have a good day, you. With that, we'll step into a short break, but as we do that, on the other side, we will get you our list of top stocks on the other side.